You see the question number 18. A and B are working partners. You see this. A and B are the working partners in a business. A and B both are working partners. And sharing profits and losses in the ratio of 3:2. Their capital showed credit balance of rupees 2 lakh. Second is 1,50,000. So total capital of the firm is 3,50,000. First partner capital 2 lakh. Second partner capital 1,50,000. Total capital is 3,50,000. Okay. And following is the P&L account. So regarding P&L account, you take net profit. Net profit in the P&L account is 2,85,000. First, you take 2,85,000 net profit. Then add disallowed expenses. Disallowed expense first is commission to partner. Commission to partner total is 30,000. Okay. Second disallowed expense is salary to partners. Total it is 48,000. Then repairs is allowable. Municipal tax is allowable if they are related to business. Then interest on capital. First partner 28,000, second partner 21,000. Total interest is 49,000. Out of this 49,000, 12% of capital is allowable. 12% capital is allowable. So total capital already I told 3,50,000. 3,50,000 into 12%. 3,50,000 into 12%, I think it is 42,000. You check it. While attending my class, you sit along with your calculator. Okay. 3,50,000 into 12%, 42,000. So on this capital you calculate. Out of 49,000, 42,000 is allowable deduction. Excess is taxable. So excess is, I think 7,000. 7,000 is taxable. Then miscellaneous expense allowable. Charity is disallowed. Charity is not related to business. Depreciation allowable as per rules. You have to take the consideration of adjustment. Car expense allowable, bad debt allowable, advertisement allowable, income tax disallowed. You take income tax. Okay. Like this, you take the disallowed expenses, come to the adjustment. Half of the car expense related to partner's personal use. So half of the car expense is 10,000. Out of this 10,000, half is not related. So half means 5,000. 5,000 is not related. So 5,000 is disallowed. First adjustment. Municipal tax pertaining to house property. So I already told it is allowable, but it is not related to business. So municipal tax 2,000 disallowed. Municipal tax 2,000 disallowed. Then half of repairs is pertaining to house property. So half of repairs is also disallowed. Repairs is, I think, 9,000. Out of 9,000, 4,500 is relating to business. 4,500 is not related to business. Therefore, 4,500 is disallowed. Then miscellaneous expense include 15,000. Donation to municipality municipal corporation for promoting family planning. So, miscellaneous expense amounted to rupees 23,000. 23,000 miscellaneous expense is allowable, but it includes donation. That donation is disallowed. So 15,000 donation is disallowed. Okay, out of 23,000, 15,000 is disallowed. And this 15,000 is donation comes for deduction at the end. And this is for promoting family planning. It comes under the last category, and adjustment you have to see thereafter 100% qualify. Qualify amount is 100% deductible. Then depreciation as per rules is 8,000. In the P&L account, depreciation is 23,000. You see here, depreciation is 23,000. Out of this 23,000, 8,000 is only allowable. 8,000 is only allowable. Therefore, remaining, I think 15,000. 15,000 is disallowed. Disallowed expense. Okay. Depreciation. So you take all the disallowed items. First is commission, second is partner salary. First, commission, second, partner salary, third, repairs 4,500. Half of the repairs, municipal tax full, interest on capital, excess of 12%, then miscellaneous expense, donation 15,000, charity 2,000, depreciation disallowed portion, car expense half, advertisement, sorry, not advertisement, income tax full. You take these items and take the total. Net profit plus disallowed expenses. Thereafter, less other head incomes. First is income from house property 24,000. Sorry, rent from house property. Rent from house property is not related to business. You take under the head less. Interest on FD with bank 9,000. This is also not related to business. Interest on POSB account. This is also not related to business. These three are not related to business. These three are not related to business. Therefore, you deduct these three items. Okay, you deduct these three items. Whatever comes, that is the book profit. Okay, book profit. In the book profit, you give working partner remuneration. So in this problem, working partners are both. A and B are both working partners. So amount given to A and B is first commission 30,000. Thereafter, salary 48,000. Salary plus commission. Salary plus commission is the amount paid to the partners actually. So the total of this is 78,000. In working partner remuneration, you calculate as per 40B. Thereafter, actual remuneration, you take 78,000. Whichever is less is allowable deduction. Deduct it, you will get the income from business. You will get the income from business. Okay. Thereafter, you see the credit side of P&L account. There are other heads income. First is rent from house property. So you have to calculate income from house property. 24,000 is the rent. 24,000 is the rent. This is the gross annual value. In this gross annual value, you deduct municipal tax paid. Municipal tax is 2,000. You deduct 2,000. 22,000 is the annual value. Okay. 22,000 annual value. In that annual value, you deduct standard deduction under section 24, subsection 1. That is the 30% of annual value. 22,000 into 30%. I think 6,600 deduct whatever balance comes, that balance is income from house property. Second head. First head, you calculate income from business. Second head, you calculate income from house property. Thereafter, you calculate income from other source. Third head, other source. Regarding other source, there are two items. One is interest on FD. Second is interest on POSP account. Interest on FD is 9,000. That is taxable. Interest on POSP account is 2,000. Interest on POSP account 3,500 is exempted income. Up to 3,500 exempted. Therefore, here 2,000 income exempt from tax. So other source income is only 9,000. Only 9,000. So in this way, you solve this problem. Okay, first you calculate income from business. Then you calculate income from house property. Thereafter, you calculate income from other source. Otherwise, you serially calculate. If you want to calculate serially, first you calculate income from house property. Second, business. Third, other source. Okay. Now you see the solution. Computation of total income of the firm for the assessment year 2021-22. First, you take net profit as per P&L account. Sorry, net profit. It is not net loss. It is net profit as per P&L account. Copy money gottilla. Net profit as per P&L account you take. Okay. 2,85,000. Add disallowed expenses. First is commission to partner 30,000. 30,000 is the commission. Second, the salary to partners. You take the total salary. ಸರಿಯಾಗಿ ನೆನ್ಪಿಟ್ಕೋರಿ ನಾನು ಟೋಟಲ್ ಬರ್ಕೋತೋಗೇನಿ ಜಾಬ್ ಕಮಿಷನ್ ತಿಳ್ಕೊಂಡು ನೀವೇನ್ ಮಾಡ್ರಿ ಇನ್ನರ್ ಕಾಲಮ್ದಾಗ ಪ್ರತಿಯೊಬ್ಬರದು ಬರೀರಿ ಟೋಟಲ್ ಮಾಡಿ ದಂಡಿಗೆ ಹಾಕ್ರಿ. First you take individual partner salary or individual partners commission in the inner column. Take the total to the outer column. Because of space problem, directly I taken the lump sum amount. Salary to partners, second one. Third is interest on capital. Total interest on capital is 49,000. Out of this, 12% of capital is exempted. That is 42,000. 3,50,000 is the total capital of the firm. You mean what individual calculate modern theory? Modle interest over capital the 12% kaliri. Yardne interest over capital the 12% kaliri. Okay. If you deduct 42,000, balance is 7,000. 7,000. Thereafter, you take the charity is disallowed. Charity is not related to business. Income tax is not related to business. Okay. Then car expense, as per adjustment, half you have to take. Out of 10,000, you take only 5,000. Then municipal tax is not relating to business. 2,000 rupees. Repays, half is not related to business. Now, out of 9,000, only 4,500 is related to business. 4,500 is not relating to business. Okay. Donation is not relating to business. This donation is included in miscellaneous expense. Okay. Next is depreciation. 23,000 depreciation you shown in the P&L account. But as per income tax rules, 8,000 is allowed. So if out of 23,000 depreciation, you deduct the allowable expense, allowable depreciation, excess is 15,000. 15,000. Okay. And if you take the total of this, the total of this is 4,28,500. 4,28,500. Then less other head incomes. You deduct the other head incomes. Other head incomes are house property 24,000 is there. Interest on FD is 9,000. Post office SB interest is 2,000. Okay. If you deduct these total three, I think it is 35,000. You deduct the 35,000, whatever remains, that is the book profit. So book profit is 3,93,500. 3,93,500. Okay. Then after calculating the book profit, you deduct the working partner remuneration. So book profit is 3,93,500 less working partner remuneration. Less working partner remuneration. Out of that, according to 40B. According to 40B, on first 3 lakh rupee, 90%. Okay. And balance is 93,500. Total book profit 3,93,500. Out of that, first 3 lakh rupee, 90%. Balance means 93,500. On the balance 93,500, you calculate 60%. If you calculate 60% on the balance of 93,500, it is 56,100. Okay, so total is 3,26,100. 3,26,100 is the remuneration as per 40B. As per 40B. Then the actual remuneration, already I told, is two. One is salary, another is commission given to A and B. Actual remuneration is 78,000. Out of these two, whichever is less means 78,000. 78,000 is allowable deduction. You deduct it, balance is 3,15,100. 3,15,100 is called as income from business. Income from business. ಸ್ವಲ್ಪ ನೋಡ್ರಿ ಆನ್ಸರ್ ಬುಕ್ ರಾಂಗ್ ಐತಿ. ನಾನು ಫಸ್ಟ್ ಟೈಮ್ ಮಾಡಿದೀನಿ, ಕ್ಯಾಲ್ಕುಲೇಷನ್ ರೀಚ್ ಚೆಕ್ ಮಾಡಿಲ್ಲ. ಎಲ್ಲರೂ ತಪ್ಪಿದ್ರೆ ನನಗೆ ಫೋನ್ ಮಾಡಿ ಹೇಳ್ರಿ. ಟೋಟಲ್ ಮಿಸ್ಟೇಕ್ ಆಗಲಿ ಐಟಮ್ ಆಗಲಿ ಯಾವ್ದು ಉಳಿದಿದ್ರೆ ಮಾಡಿದ್ರೆ ನೀವು ಇನ್ನೊಂದು ಬಿಡಿಸ್ರಿ. ಈತ ನಾನು ಈಗ ಅಲ್ಲಿ ಕಾಲೇಜಾಗ ಕೂತ್ ಬಿಡಿಸೀನಿ, ಗಡಬಡಿ ಒಳಗೆ ಬಿಡಿಸೀನಿ, ಪ್ರೊಸೀಜರ್ ಮಾತ್ರ ಹೇಳಿದೀನಿ. ಆನ್ಸರ್ ರಾಂಗ್ ಇದ್ರೆ ನನ್ಗೆ ಕೇಳಿ, ಯಾಕಂದ್ರೆ ಆನ್ಸರ್ ಬುಕ್ ರಾಂಗ್ ಐತಿ. Then first business income completed. Now you go to income from business. House property you calculate. Gross annual value means rental value. Rental value 24,000 less municipal tax paid. 2,000 municipal tax paid is there. You deduct it. 22,000 is called as annual value. Annual value. In this annual value, you deduct standard deduction under section 24, that is 30%. 6,600 you deduct. If you deduct 6,600, balance is 15,400. 15,400. That is called as income from house property. House property. Second head. Right. And next is income from other source. In the other source, only one item is there, that is the interest on FD, 9,000. That 9,000 you take to the outer column. Sariyagi telaga barri chennange 3 heads are there. One is income from business, second is house property, third is other source. Illi post office SB barodilla because it is less than 3,500. Okay, now you take the total. Total is 3,39,900. 3,39,900 is called as gross total income. Gross total income. Okay. Gross total income is 3,39,900. Then you deduct deduction under section 80. Under 80, there is one deduction, that is 80G donation. Donation under section 80G. The donation is to municipality for promoting family planning. This is coming under the second category item. Okay. So 10% of adjusted GTI you have to calculate. First, calculate qualify amount. To calculate qualify amount, 10% of adjusted GTI you have to calculate. GTI means 3,39,900. In that, you have to deduct 3 items. All other deductions, long-term capital gain. Third is share of association of person. If you check the items, none is there. None is there. So this is the, I think 33,900 is the 10%. 33,990 is the 10%. And actual donation is 15,000. So 15,000 is less. 15,000 is fully qualified. Full amount is qualified, and promotion of family planning comes under 100% reduction. 100% deduction. Therefore, 100%, 15,000 qualified, 15,000 deduction, you give 15,000 is qualified, 15,000 is deduction amount, because 10% of adjusted GTI is 33,990. So that is 10% is more. So consider less amount. 15,000 qualified, 15,000 deduction. You deduct it, whatever balance comes, that balance is income, total income. So total income is 3,24,900. 3,24,900 is the total income. Okay, total income. In this way you calculate, and you calculate according to given direction. If there is any total mistake or item is wrongly, amount is wrongly entered, you call me. This is the question number 18. Okay, this is the 18th exercise from Baligar book. Okay. Now you see the question number 19. Question number 19. In this question, A, B, and C are partners. There are 3 partners sharing profits and losses in the ratio of 4:3:3. 4:3:3 is the profit sharing ratio. Okay. And P&L account is given to you people. P&L account is there. In the P&L account, you take the net profit. Net profit is 80,000. First, you take the net profit 80,000. Add disallowed expenses. First, salary is allowable. Second, rent is allowable. Third, miscellaneous expense is allowable. Car expense allowable. Advertisement allowable. Income tax disallowed. First disallowed expense is 25,000. 25,000 income tax. Loss of cash kept in the residence of partner. In college loss of cash during office hours in the office premise is allowable. Other than this, disallowed. So it is in the residence of partner. So this is disallowed. This is disallowed. Donation is disallowed. Donation disallowed. Commission to partner disallowed. Salary to partner disallowed. Interest on capital total is 21,000. Out of 21,000, 12% interest on capital is allowable. You deduct 12%, and remaining excess is taxable. Okay, nothing is given here. And as per adjustment or as per the given instruction, we will consider it. Depreciation allowable. Okay. Out of this allowable, disallowed I mark. Come to the adjustment. Miscellaneous expense paid for private expense of partner, 5,000. So for miscellaneous expense, 5,000 is disallowed. 5,000 rupee disallowed. Okay, 5,000 rupee disallowed. Then advertisement include 2,000, which is not related to business, disallowed. 2,000 rupee disallowed. 1/3 of the car expense related to personal use of partner. This is also disallowed. Okay. Donations are paid to municipal corporation for promoting family planning. Okay, donation. This is for deduction purpose adjustment. So donation is municipality for promotion of family planning, comes under second category. 10% of adjusted GTI or actual donation is qualified. Thereafter, full amount is deductible, allowable as deduction. Then depreciation as per rule is 15,000. 15,000 is allowable, but in the P&L account 20,000 is there. So out of 20,000, 15,000 allowable, 5,000 disallowed. 5,000 disallowed. Then rate of interest is 14% on capital. Rate of interest on capital is 14%. So out of 14%, 2% is disallowed, 12% allowable. So out of 21,000, 2% of interest on capital is disallowed. As per given instruction, we will disallow 21,000 into 2 divided by 14. Disallowed rate divided by total rate. Okay. B and C are working partners. B and C are working partners. So B and C payment. B payment and C is salary 45,000. Only one item salary. Salary is 45,000 paid. That salary 45,000 is the only one expense. Clear? That is considered for managerial working partner remuneration. Then car is purchased and sold. Is the only one asset in that block. This adjustment we use for calculating capital gain. Capital gain. Okay. Each item anna add madri. Then go to credit side and deduct this. Profit on sale of car is not related to business. Bad debt recovered previously taxed. Previously taxed means it is to be considered in the less side down. Interest on bank deposit 5,000 not related. Dividend not related. If you deduct these 4 items, you will get the book profit. In the book profit, you calculate remuneration as per 40B, and actual remuneration paid is only 45,000. This is the only one item remuneration paid to working partner 45,000. Whichever is less is allowable deduction. You deduct it. Adun kalir. Kalad nantar ಏನು ಉಳಿತೈತಿ? Income from business. Thereafter, you calculate profit from capital gain. Capital gain. Business ಆದ್ಮೇಲೆ capital gain calculate ಮಾಡಿ. Capital gain ಹೆಂಗ್ calculate ಮಾಡಿದ್ರ? Full value of consideration you take as the sale value. Sale value is 61,000. You take 61,000 sale value. Less written down value 40,000. You deduct 40,000 written down value. Whatever remains, that is the short-term capital gain. Short-term capital gain. And in the other source, you take 2 items. One is interest on FD, another is dividend from Indian company. Other source income estate kedra 15,000. Muru kursi ಏನ್ ಸಿಗ್ತದೆ? GTI ಸಿಗ್ತದೆ. GTI ದಾಗ donation ATG less ಮಾಡು. ATG donation ಎಷ್ಟು ಕೇಳಿದ್ರ? Donation 2,000 rupees. 2,000 less ಮಾಡ್ರಿ, total income ಬರ್ತೈತಿ. So you see the solution. Net profit as per P&L account. Net profit as per P&L account is 80,000. 80,000 is net profit as per P&L account. Add disallowed expenses. First disallowed is commission. Second is salary to partners 45,000. Third is interest on capital 21,000. 2 by 14 is disallowed. Next, income tax disallowed. Loss of cash kept in the residence disallowed. Thereafter, donation disallowed. Miscellaneous expense, personal expense, partner disallowed. Advertisement disallowed, not related to business. Depreciation 20,000 minus 15,000, 5,000 disallowed. Car expense 1/3 is disallowed, 2,000. Okay. If you take the total, this total is 2,200. In this total, you deduct other head incomes. First is profit on sale of car 21,000. Second, bad debt previously tax means disallowed 5,000. Interest on term deposit 5,000. Okay. And one more, dividend from Indian company 10,000. You deduct these items not related to business. 41,000 you deduct, balance is 1,61,000. 1,61,000 is called as book profit, and thereafter you calculate working partner remuneration. On first 3 lakh rupee 90%. 1,61,000 into 90% or 1,50,000, whichever is more. First point. This is the remuneration. And actual remuneration paid is 45,000. Salary only one item. Whichever is less, 45,000. This is the income from business. 1,16,000. 1,16,000 is the income from business. The next capital gain you calculate. Full value of consideration is 61,000. Another sale value. Less written down value 40,000. Short-term capital gain is 21,000. In this way you calculate. Short-term capital gain 21,000. Other source. FD interest is 5,000. Dividend from Indian company is 10,000. Total is 15,000. Other source. Okay. Business income, capital gain, other source. You take the total, 1,52,000 is the GTI. 1,52,000 GTI. Less deduction under section 80G. That is 2,000 donation to municipality for promoting family planning. Isn't Kaliri? Isn't a month new 10% man notable. Adjust GTI daga calculate madadra 1,52,000 10% madadra 15,200 after. 15,200 or 2,000, whichever is less, qualify. Qualify out 2,000 qualify. In municipality promoting family planning, full deduct full amount deduct 2,000. If you deduct 2,000, your total income is 1,50,000.